I finally freaking did it. With a few days left in the year, I requested, was approved, and even received the single largest payout of my entire career. I should also add that I finally freaking hit the record button because I tried to film this video like 5 different times and then I looked over and it wasn't recording at all. So that definitely made me feel some sort of way.
Are you dumb?
I just got that magical max payout of $40,000. Folks, if you haven't been watching the show, if you haven't been in the streams, I've been after this goal all year. I found about this sim to funded ecosystem trading about December of 2023, started taking it seriously in January, set a goal of, hey, I want that max payout, and I got it, but I have to admit, the journey was a lot more arduous than I ever thought it would be. In this video, I want to share a little bit of the story, but most importantly, I want to give you my 3, count them out, 1, 2, 3 major tips and tricks that I truly believe are the reason I was able to get to this level of success. So with all that being said, let's rock. To get us started, let me prove it to you. There's too many talking heads, too many fake gurus and furus on the internet saying stuff that they have no clue what they're talking about. So out of the gate, this is why you should give me a couple minutes of your time. As you can see here, December 27th, 2024, 20 different emails from Apex, all stating I was approved for a $2,000 payout. So 20 times 2,000, that's the 40,000. Now to take it to another level, that money actually hit my own account on December 30th. So I got the money on December 30th. I was approved on the 27th, and the request was actually the day before Christmas, December 24th. So the whole process actually relatively fast. Now you might be thinking,
hey, that's cool for you to show me in a video, but I would like to confirm that myself.
And I don't blame you at all. Once again, I understand the state of the internet. Now, if you come to Apex's website, apextraderfunding.com, you might want to know that you could scroll all the way to the bottom and click on this resource payouts, which is actually going to show you their most recent payouts. And you can see at the time that I'm filming this, people are getting paid out December 30th, 500, 500, 552, and it goes on. Now, obviously, as I just said, I requested on December 24th. So at least at the point that I'm filming this, I'm all the way down on page 12. And when you finally navigate to this page, you're going to go down a little bit and you're going to see a bunch of Matthews. That's me, Thickness himself, getting paid out. Matthew, 2,000. There's 20 of them. That's the 40,000. Like I said, I'm just doing this not to brag or anything like that. It's just to kind of show you proof. And also, I'm just excited because this was a year-long journey of my life. Many of you watching have seen the show. You've seen the stream. There was little periods of success, a lot of bouts of failure, and finally, into round 15 of it all, as I'm fighting Ivan from Russia, I was able to find a little bit of success that I was very much looking for. And to the new viewers, you might be thinking, what in the world is Apex? Now, the point of this video isn't really to fully explain what Apex is and all the nuances, but as a high-level overview, this is a sim to funded company. So basically, you sign up to take a test, a trading test in a sim account, as in paper money, as in not real. If you do well in that test, as in you pass the test, then you go into a funded account. And if you trade well there, that's when you're actually talking about real money. Now, the test itself is basically, can you make a certain profit without having a certain drawdown? And that's different based on your account size of the exact numbers you have to do. But overall, you're looking for a certain profit without having that big of a drawdown. Now, if you're able to do that, that's when you go to a funded account. And that's where it gets fun because you're trading for real money. On the screen now is the quick overview of what in the world's going on. But what you need to know is the first $25,000 per account, and each individual user can have up to 20 accounts. The first 25 grand per account is yours. And then after that, it's a 90-10 split with the company where you get to keep 90%. So in a nutshell, that is sim to funded trading. And these are the specific rules for Apex. And I found out about this whole thing about a year ago. In December, I thought it was interesting. And by January, I was absolutely hooked. And the reason I was hooked was because of the risk to reward. If you think about it, whenever you're trading, you're risking your entire portfolio, your entire brokerage. There is a theoretical chance it could go to zero. Obviously, you hope it doesn't, and with proper risk management, it won't, but that is what you're risking. What I like so much about this is The risk was whatever I put on the credit card to take those tests and to get over to a funded account. But after that, the risk was not mine. It seemed in my mind that if I could trade well, the return on that was borderline infinite. Now, that's not exactly right, but that's what was enticing. So right away, I was addicted to the idea of, can I come up with a strategy or a system or an overall methodology that would increase the chances of me being able to take advantage of this whole new world of trading? And as you can tell from the time that I'm filming this video, it took me a while. And I haven't just been trading for a year, I've been trading for the better part of a decade. Folks, I'm one of those nerds who started trading in high school, so I had a lot of a trading experience. This was difficult. And in fact, I want to clarify this. Trading itself, if you've ever tried it, you know, is absurdly difficult. Yet, for some reason on the internet, people have this idea that, okay, trading's difficult, but if I go to sim-to-funding trading, it should be magically easy. No, it is not easy. I don't want anyone to have those visions of grandeur that you're not successful in trading and then you just switch over to sim-to-funding and it should just work, as if you're just Jerome Powell printing money out of the sky. Folks, it does not work like that. Yes, I love the superior risk to return in this particular world, but you still have to have those core competencies of trading. And as much as I thought I had those core competencies myself, this journey was an arduous one. Now, I don't want to bore you with the details of the entire year, but if you watched the show, the live stream, you knew there were periods where I'm up and up and up and getting some payouts and looking good. And then you know there were pretty serious drawdowns where it seemed like I was being employed just to blow out accounts because that's the only thing I remember doing. It was a brutal process. And with all that being said, I do want to skip some of those important chapters of some success and some failure, and let's skip all the way ahead to November. At the start of November, I had the profound realization that there were only 2 more months left in the year, which was interesting because that meant I had very minimal time to achieve a goal that I publicly stated to everyone I was setting out to do. So with that mindset, I got locked in. I felt like I was in the next car by Vin Diesel in the Fast and Furious movie, and I was part of the family. My point is I was locked in and I was ready to rip. And I did. The first week, the first 2 weeks, the first 2.5 weeks, my account is slowly but surely going up and up and up. And then it wasn't. I don't know what day it particularly was, but I went on tilt and it was bad. Because if you know the rules of Apex, by the time you're up a couple $1,000s, you're going to expect some money back in terms of like hitting all the rules and requesting out. All my accounts were up $10,000. And across 20 accounts, that means I was up 200K. But for one reason, I took a loss, didn't like it, tried to chase it, tried to get it back, took another loss, went revenge trading, doubled up, tripled up, and it went bad. So I was up 200K. I think by the end of that day, I was down 160. So I only had 40 left, and then I blew that all out the next day. So about 2.5 weeks of grinding higher, and then I got crushed. And then I had to go into Thanksgiving and just sit there like a grumpy toddler. At that point, I had one of 2 decisions. I quit and say, F it, this is a scam like much of the internet does, or I give it another shot, and that's what I did. At the start of December, I figured, hey, just give it another whirl. That's trading. You were kind of close. You showed certain sparks of success. Can we just clean up some of the messy edges, if you will? And I started to do that. And I was trading and trading and trading, and surprise, surprise, about another 2-ish weeks in, I ran my accounts up. I was crushing it. This time I was up more than 200K in total across all 20 accounts, and I went on tilt again. But this time was also a little bit different. For whatever reason, midway through the day, I knew I was in tilt. We all know that feeling, but sometimes you can't pull yourself out of the emotional spiral. And I realized to myself, oh man, like, okay, like you got to stop. You're going to blow it up again. And like, you're truly going to be embarrassed. You're going to be in that own mental torment where you're like kind of talking shit on yourself and everyone else is going to know. You're going to have to explain again to your stream why you blew up all your accounts. And there was just nothing positive about it. So halfway through the day, it was actually on the day of FOMC, I was just getting whipped out like a lost a grand. It just kept happening on all the individual accounts and times by 20,000 chunk, 20,000 chunk, 20, 40, like it just gets bad. And then I finally was able to pull myself out and just go back to a core set of rules that I was working on. And as many of you don't want to hear this, there's a very important aspect of luck when it comes to trading. but you're gonna wanna set yourself up where you're really setting yourself up to take advantage of luck. It's kind of like when opportunity meets preparation, that's luck. Well, if you're always doing the right thing over and over again, it feels like you have more luck. And now the next logical question is, okay, Mr. Internet Man, what are you doing that is giving you more luck? And the answer there is pretty simple. It's discipline. And now I know, mind explosion. Obviously, you've heard that in every single podcast, every single video. You've read it in every single book of a good trader is discipline. Discipline, discipline, discipline. That's the trading guru, furu, educator favorite word. If you're disciplined, it's the magic door to everything. And that's reused a lot. It's regurgitated a lot. And it's not really wrong, but it's also not really right. I don't think the word discipline is the proper word in the world of being a disciplined trader. In life, if you go to the gym every single day, if you eat well every single day, if you are getting the proper sleep every single day, in all of those circumstances, the rest of the world still calls you disciplined. In the world of trading, if you are not disciplined one time, there is potential of it being game over. I truly believe that the disconnect here is the fact that discipline, as we use it in the English language, is not a strong enough word to explain what you have to do to be a successful trader. Because in many other aspects of life, we would call someone disciplined for doing ABC. But in the world of trading, as I said, one slip up, it could be game over. So in reality, we shouldn't really be calling it discipline, like, oh, that's a disciplined action. If anything, it's more of a rules of survival. And if you break a rule of survival, there's a chance of, I truly don't think anything that I'm saying is necessarily profound. And if you think about it, you're probably thinking to yourself, oh, okay, that makes sense. But I think it's one of those things that was all in our subconscious. So it's completely different to bring it to our conscious level and talk about it and think about it that way. It's a new mental framework on not only trading, but what does it mean to actually be a disciplined trader? Because I truly believe to be a disciplined trader, that's how you increase your levels of luck, which is ideally how you make a profit. So then this problem really boils down to you're trying to make money. To make money, you want to put luck on your side. If you put luck on your side by being more disciplined, and we actually now know what discipline means, well, now we're just at the final part of the problem of, okay, what do we have to do to generate those rules of survival that we actually stay in this game and continue to ideally have more discipline, more luck, and make more money? I hope that makes sense. So for me in this journey over the past year, I've come up with 3 very extraordinarily simple things that I think are going to increase your chances of survival and thus luck and thus payouts and profits and tendies. Rule number 1. I know many of the people watching this, if you're trading on sim to funded, you're trading futures, and a lot of people enjoy trading the overall market, such as the S&P 500, the Dow, and the Nasdaq, and I'm one of you people. When I was going through my trade journal, I noticed a lot of the times I was taking a very similar setup, and sometimes it worked magically, and then there was bouts of times it did not work at all. So I was curious about that. I wanted to isolate all the times that I was trading NQ, which is the Nasdaq contract on the futures market, and isolating all the losers and trying to figure out the times that I, in my own mind, was getting whipped out. The results of that one small basic study actually turned into one of my cardinal rules. As a Nasdaq trader, I now do not trade it if it is not in agreement with the S&P 500. So what do I mean by that? On the screen now is the S&P 500, the ES contract. As you can see, the 5-minute, the 10-minute, the 30-minute, and the 4-hour, all the EMAs and the price action trending down. Now, if I were to look at the Nasdaq, the 5-minute, the 10-minute, the 30-minute, 4-hour, all the same thing. They're all in phase with each other. So once again, I understand that this is not profound in any way, but if I see 2 things that are highly correlated, as in a lot of the equities that make up one index are in the other index, if they're all doing the same thing across major timeframes, I want to trade with that trend. Because previous to this, when I was looking at some of my Nasdaq whipsaws, I realized that the Nasdaq and the S&P 500 were not in agreement. The timeframes were not in agreement. So one super basic rule is I want all the trends on all the timeframes to be telling me the same thing. I know, very simple, but it's made a world of difference. And this leads us to rule number 2. With a lot of these sim to funding companies, especially Apex, you have to consider your drawdown. In fact, there's sometimes various drawdown, as in your max drawdown, your intraday drawdown, that drawdown, this drawdown, all the drawdowns you gotta consider. Because of that, and also the fact that the futures market is highly leveraged, one contract has it can have a large financial, it's actually surprising how in an intraday session, one contract financially, how much it can mean. So because of that, 99% of the time, I'm only trading one contract. I'm only trading one mini. I don't really mess around with the micros because by the time I look at commissions and how that all works out, I'm not a fan, but I definitely don't want to trade more than one. Once in a while, because of an absurd dollar cost average type of thing, I might throw on a second. I don't want to be clear about that. I haven't stuck to this rule 100% of the time, but 99% of the time, I don't think that there's much of a reason to be trading more than one contract. And last but not least, rule number 3. Similar to the other rules, this one was birthed, if you will, from looking at all my historic trades in these accounts. And I realized, oh, wow, a lot of the times I do pretty good in the morning. And when I keep trading in the midday, especially in the midday, and sometimes in the afternoon, things go south, and they go south pretty quick. So I was able to fix that by, I only let myself trade one time per day. If I get up, execute a trade and make a good profit, it goes in my direction, cool, done, donezo. I shut it down, I move on with my life. If it's a losing trade, I give myself one more opportunity. Does not matter. If it's a green trade and I eat into those losses, or if I go net green, great, I'm done. If it's a red trade and I now have 2 losses on the day, I'm done. So at max, I'm trading twice a day, and I only get into the 2 times a day if my first one is a losing trade. If my first one's a winning trade, I am donezo. That's it. I'm just exit as fast as I can, because really all of this is to protect me from myself. Remember, we're attempting to not just be disciplined, but we're attempting to follow these rules of survival. These 3 very simple, basic rules do not keep me just disciplined, but they are my rules of survival. And if I were to dive into that a little bit more, they're honestly just protecting me from myself. I don't know how it is with you in your trading career, but I have those large winners and the large losers. I know the saying of oh, let your winners ride and cut your losers quickly. No, duh, that's obvious. But my issue is I could let my winners ride all the time. The issue is I also let my losers ride. So for me, the mindset was, okay, maybe the profits, the win column, those green trades will take care of themselves. Maybe my real job is just to work on cutting out my losses lower and lower and lower. Once again, let the winners do whatever. I don't need to change that column. That column was already impressive. The issue was it was being dwarfed by the losing column, if that makes sense. So all of these rules of survival, they're all intentionally created to lessen this column. I want to make sure that the trend is similar in highly correlated products, and I want to trade with said trend. And even if I'm right or wrong, I only want to trade the smallest size I possibly can, because of variance itself. Even with a perfect setup, you're not going to get every single trade to go your way. So if I am wrong, I want to make it minimal. And also the last rule to really protect myself from myself is if I have money, say thank you, see ya, I'm getting some coffee, I'll come back another day. And if it does go against you, I'm trying to just limit how much damage I could possibly do against myself. I hope that all makes sense. Obviously, if there's any questions or comments or need for clarification, let me know in a comment below. But just to show you how much these rules of survival have actually helped me, here's all 20 of my accounts. You can see, just count them up. It just keeps going. It's a large list, but I'm up about $15,000 on all of these accounts after getting the 40K payout. So I'm up 300K, but I've already been paid out 40. So roughly in total about 340. So it's going well. I just want to show you that I'm not just randomly popping off saying these things. These accounts have been alive for about 19 days. And if you put in that mindset of no, the profits are going to be in control of the profits. Cool. They know what they're doing. Your job, and I truly believe this in terms of your accounts, is you are the risk manager. You are attempting to make your account survive. So anything you could possibly do to implement it just to avoid a D-Day type scenario, I think you're going to see a lot of positive return. Personally, I'm very interested in making this a series as we move forward into 2025, so I would love to hear your thoughts. Do you want me to make a breakdown video on Apex and my thoughts on other sim-to-funded companies and how I handle them and the rules and the management and just what they are in a general sense? Do you want me to do more of a trading journal type log, like a video for every payout and what I learned in that recent, session of trading days? Or do you want me to get a little bit more into the nitty-gritty of the actual trading system of why I'm looking to get in and out, my profit targets, my exit? So like a true trading system with accuracy, variance, profit factor. So if any of that, or maybe if all of that interests you, let me know in a comment below, because obviously I want to make the content that you enjoy the most, because I appreciate you even giving a second of your time. Obviously, if you're interested in Apex Trader Funding, there's a link in the description below. They're currently running a 90% off deal, so I hope you're watching this video early, because at the time that I'm filming it, the deal runs for another 2 days and 8 hours. Normally, they're either running a 70% off deal, 80% off deal, or 90% off deal. They like to bounce between them, but whatever the best deal is at that current time, if you use the code GOONIE, GOONIE, you will automatically get that deal. So you don't have to worry about missing out on anything. But if you do it quickly at the point that you're watching this video, using the code GOONIE, GOONIE, will give you 90% off, which means I think to take the test, it's about 16 or 17 bucks. Very, very affordable. That's what I have for you. I appreciate all the good vibes. I hope you're able to learn a thing or two from this video. And most importantly, I just wanted to say thank you, because I know many of you watching this video were on the year-long journey with me, the good times, the bad times, and really the questionable times at the end of if I was able to pull it off. But here we are in the winner's podium. So from the bottom of my heart, thank you so much. And also for those of you just watching this video, I appreciate your time. I appreciate the good vibes. I'll catch you in the next one.